Here is not good news, right? Inflation hits 40-year high. And let's talk about what does that actually mean just in general of the macro markets. What does it mean for you as a investor of your own portfolio? So inflation has surged yet to another 40-year high. So it's kind of interesting of the surging. The reality is actually increased about 1% from last month. The index has soared about 8.6% from a year ago. Grocery prices are up 11.9% annually, their highest rate since 1979, according to government data. Further, energy prices jumped 34.6% from a year earlier, with gas prices up 49%. A lot of this has to do with the war, quite frankly, right? If you actually look back at it, why the grocery prices or food costs increased so much. Russia had been a very big exporter of natural gas and also, I believe, a lot of fertilizer. And so, if we said no to a lot of this, or a lot of countries said no, or they stopped producing altogether, then that certainly impacts everybody. And some people may have thought, look, it's just a Russia, Ukraine war. Let them figure things out themselves. It doesn't impact us at any means. But as we can see over time, as it's been, I think, 4 months now, 3.5 months, 4 months, it's all adding up. So it makes it very challenging for a lot of people, right? Because what does the Fed do in this situation? They basically do what they have been doing. The question is, do they accelerate it? They may be warranted to accelerate it because the interest rates or the inflation levels have not actually declined back down. And so do not be surprised with further rate hikes. It would be a little bit of a surprise if the rate hikes were actually the speed of the rate hikes was faster in terms of the basis points jump. But it shouldn't also be a surprise either because of what we see here. And so what does that mean for you as a homeowner or home seller? It just depends. At the end of the day, the thing to always keep in mind is perspective of timing, right? Because inflation in this case also impacts your rent. And a lot of people don't need to necessarily sell. And so for a landlord, quite frankly, real estate is a very good hedge because, right, their cost basis is the same. Right? It's not like there's extra costs. I mean, yeah, there's extra costs of repairs, but that's so minimal relative to the value of a house. But your property tax stays roughly the same. You only increase by 2% a year anyways. Your mortgage is the same. It's locked in, right? So you're all set regardless of what happens with prices. But from a cash flow perspective, when it comes to rents coming in, you see that will continue to increase to accommodate these levels and also accommodate people stopping to buy homes and rent instead. So typically rent has pressures to also increase pretty significantly. And you've already seen that over the course of the last year. And so real estate then continues to be a very interesting play, right? Because what are your alternatives as an individual? You need to think to yourself, what are you going to do to combat 8.6 inflation? From an index perspective, it's actually much higher than that. But what are you going to do yourself, right? Do you buy real estate? Do you buy stocks? Do you buy crypto? Do you buy bonds? Do you sit in cash? The issue with cash is cash gets eaten up by this amount, which is a very significant amount, right? No savings, no money market account will be able to help you there. And so that's the thing to keep in perspective. And also, if you're renting as a buyer, as a potential buyer, that you're questioning, oh, things may go down, I could buy a discount, et cetera, et cetera. The challenge in your case is you are then paying a higher and higher amount each year, but you're also paying a lump sum you're paying a lump sum as you wait. And that's the downside for buyers, because over a long period, things tend to do well and will continue to do well. Otherwise, to be fair, we have much bigger problems anyways. So that's kind of what happens in the buy side. And if you're a seller or you own properties, you may be asking, what should you be expecting? Well, the fact is the market has certainly changed, but it's still relative to history, still some of the highest prices that there is. So for some of that short term, because you plan to sell maybe as a retirement, so a lot of your money may be in the home and you're needing to use that for other things, then those are opportunities to also sell, right? So at the end of the day, there's no right or wrong timing of it. You don't try to time the market. You try to have your time in the market. Number one. Number two, it's all perspective of where you are also at. Right now, if you have multiple homes and you have a long time frame, then that's different. Then it's up to you. But it's also a very difficult thing for all of us to decide where should you be putting your money given all these things, right? If inflation was at nothing, then that's different. But if it's at this levels, your cash is getting eaten up. Thank you for watching this short on my YouTube channel. For more shorts, go ahead and click here. For more live streams, you can go ahead and click here. I'll see you at the next one.